everyone, and welcome to episode 114 of the Rewarding Property Decisions podcast. So welcome back. It's our 6th year, if you can believe that. It seems time's flown, but it also seems like we've covered a hell of a lot of ground and topics over that time. So it's good to be back. Looking forward to 2026. We've got plenty of great guests locked in, but we'll also be, and some really good topics and ideas for that as well, but we'll also be trying to be as flexible as possible to deal with topics that are front of mind and that are being asked about and discussed a lot in media, but also through our clients and things as well. And as always, if you've got ideas or things that you think that we need to cover, I'd love to hear it. So feel free to shoot an email or put some comments on whatever streaming service you're using. But we're always open to ideas of things that we should be covering. So as we start the year, as we always do, we've got our property report release, which no doubt some of you will have received. And it's because there's a lot of content with that this year, we've decided to break it into two parts. We've done that in the past, but sometimes it's not probably as necessary. But there is quite a bit to discuss this year. So we've decided to cover it off in two podcasts. We'll get the first one this week and then another one in a fortnight's time. So from our perspective, we feel as though the Melbourne market this year, well, at the start of this year, has probably reached a bit of an inflection point. Things started off in 2025 quite well. There was a lot of positivity. There was reason for expectation that the market was going to improve throughout the year, and it generally did. But as we got to the back half of the year, things started to cool a little bit, and we'll go through the reasons why that's been the case. So what we're going to, in the way that we're going to divide the two podcasts up, we've got some really interesting data that's discussed in the report that we've accumulated through analysing our own inquiry levels and how they've come about and what's been interesting out of those. So that'll be the first part. And then the second part is we've got 6 dynamics that we feel are going to influence the market going into 2026. So that's what we'll cover in the podcast in a fortnight's time. All right, so let's get underway. What does that inquiry data I've just mentioned tell us about Melbourne's investment landscape going into 2026? So as you'd expect with most businesses, we certainly track and monitor and analyse the data that we do accumulate throughout the year, looking at where it's coming from and why, those sorts of things, but also what it's telling us about perhaps market activity at that time. So we're looking at, and many of you will be aware of this, but we look at home buyers. And so where are they coming from? What sort of budgets? Where are they most attracted to? Same with investors. What sort of budgets are they working towards? Do they have leanings or focuses in certain parts of property investment? And then obviously we work from our vendor advisory perspective, which we refer to as our disposals. So that's the third inquiry type that we tend to focus on. So it's not mass market data. It's not a case of right out in the public and covering everyone and everything, but it tends to focus on qualified buyers who've got a real genuine interest in property for some reason and transacting in some form. But they do tend to probably move, or our data tends to move a little bit ahead of the general market. So the inquiries tend to precede transactions precede settlement, and then obviously settlements precede the eventual price indices of actually having a sold or a transacted property. So it can be a few months ahead because obviously the transacted settled properties can sometimes be quite delayed. So our data does tend to preempt what might be coming about. So what does it tell us in terms of investors going into 2020 or from 2025, sorry? And our data really showed that there was a bit of a shift in sentiment from an investor's perspective. The inquiry levels that we got from investors year on year were up 79% for 2025. So that's a significant change in investor activity over that period of time. And the investor share of our total inquiries was up to 53%, which is the highest it's been since 2022. So that's a significant jump and a change in mindset of inquiry levels that we've got. And disposals, interestingly enough, dropped from 35% down to 22%. So what that's telling us is that investors were certainly returning to the market, but also there was the exodus of investors out of the market that was triggered by the land tax changes and requirements of minimum standards from a landlord's point of view. That exodus that we saw a few years ago has probably plateaued and found its level, and now it's more of a standard exiting practice that you will always get with people transacting property. So it's found its new level. So where are investors coming from at the moment? Well, we put out a podcast last year where we started to notice this trend, and many of you will have listened to that. And that was that for the first half of the year, it was very much being driven by interstate investors. Sorry, that was 53% of the investor inquiry, and Victorians made up 45% of the investor inquiry. With the second half of the year, the Victorians started to lift a little bit, show a bit of a return. It wasn't significant, but it went up to 51%, and interstate was down to 49% of total. So of our total investor numbers, that was made up from an interstate perspective of 27% from New South Wales, 11% from WA, 8% from Queensland. So the major states where property performance and growth has been quite strong around the country. So it's early days yet, but the market was very much interstate driven for a while there. The second half, obviously Victorian, but it'll be we're a little bit uncertain as to whether or not that's going to continue going into 2026. And certainly that shift in rate expectations that we saw at the back end of last year was one of the major influences around the market starting to probably lose a bit of its confidence over that period of time. So it really didn't get a chance, the market in Melbourne, to consolidate that stronger performance through the first probably 3 quarters of the year up till that September, October, which is when things started to shift and we started to see that those confidence levels start to drop a bit. So how does the market here compare to the broader market? Well, it's a different market in terms of sources have different answers. So depending upon where you're getting information from. So Cotality was suggesting that dwelling values were up 4.8%, whereas Domain's median house price says prices rose by 7.4%. Now, we've discussed statistics and how to analyse them a lot in the podcast, and that's probably the key difference here. Cotality's talking about dwellings, so they're including units, apartments, whereas Domain's focused on houses, and obviously the housing market has still continued to outperform the apartments, and therefore that's where you get that gap. But generally, both are pointing to reasonably modest levels of growth when you compare it to the other capital cities around the country, which we'll get to down the track. But our data captures something that perhaps these sources don't, and that is that directional shift that I mentioned before around investors returning to the market. And it's that you probably don't get that just from focusing on that growth side of things that the other data sources were looking at. So where does Melbourne's market stand as we enter 2026? Well, we've, as many of you will know, have mentioned for a number of years now that we feel as though Melbourne is undervalued, and we certainly still feel that at the moment. But the value gap from Melbourne to other capital cities is only continuing to widen at the present time. So Perth, Brisbane and Adelaide have delivered growth of anywhere between 80 to 90% over the last 5 years, which is significant when you compare it to Melbourne's, which has been more around the 15% mark. So that gap just continues to get bigger. Yet the fundamentals of Melbourne being a growth city and a great performing property city in the past are still very much there. So we've still got the strongest population growth by volume of any capital in the country. There's constrained housing supplies levels as well, particularly in the inner city areas. We've still got a high livability and employment opportunities, so that certainly gives scope in that regard as well. And the relative affordability of Melbourne versus, say, Sydney continues to widen. So we're relatively affordable in that regard too. So the value is definitely there, it's self-evident. But what is missing at the moment is the general market confidence and consumer sentiment, that type of thing, which is just not as strong as it should be. And that's something that will take time to build. It's not going to change overnight. Now, it did start to build through 2025. The interest rate expectations had shifted at the start of the year, and the rates were expected to drop throughout the majority of the year. That was the general sentiment, the commentary from most economists and from the Reserve Bank. But and the other thing that helped that confidence move along was probably in that sub-$1 million market, where the federal government's first home buyer support schemes around the 5% deposit certainly gave confidence. So buyers under 950 were starting to come back in, and that established apartment market we saw certainly in the inner city had some confidence about it and a bit more activity. But as the year started to progress, things started to change. And the rate speculation turned from reductions to the potential for there being an increase. Inflation became a bit stickier than what was expected, and the RBA's tone turned hawkish. And then by December, before any of the rate rise or the recent rate rise had occurred, the confidence had really started to shift. Clearance rates started to drop. Now, that's not uncommon at the end of the year. We do quite often see the rates start to come down at the back end of the spring market when there's been a lot of buyers exit. But it probably came about a lot earlier this year than what it has in the past. And sort of post-Melbourne Cup, when that commentary around interest rates started to shift, the confidence levels dropped. And a lot of buyers put things on hold leading into Christmas. And then obviously we had the interest rate rise that occurred a week or two ago, and we're now sitting at 3.85%. Cash rate. So what does this mean for 2026? Well, the rate rise will be a test for the Melbourne market, not necessarily the fundamentals, because they're certainly still very much there, but it will be around that confidence that we spoke about before, and whether or not there's going to be further rate rises, because 25 points shouldn't fundamentally change anyone's borrowing capacity, particularly with the way serviceability is tested these days with stress tests of up to 3%. The impact is far more psychological than it is around the actual rate rise. So the tester will be whether or not that rise is just a one-off, or whether or not it's a signal of a tightening cycle starting to return. And if that does happen, well, then there may well be a shift and things may cool further. But Melbourne does enter 2026 as undervalued. And if the benefits that the other cities have seen continue to show them that they've got growth, then that interstate investment activity could still help to keep Melbourne moving along. So those are the main points that we wanted to look at for today's episode. Obviously, as I mentioned, we've got the next one in 2 weeks' time, where we will focus more on probably 6 key factors that we feel are going to determine the trajectory of the Melbourne market going into 2026 and beyond, and how that will influence market activities. But great to be back. Thanks very much again for joining me for episode 114 of the Rewarding Property Decisions podcast. Please, as always, feel free to share the podcast far and wide and let family and friends know about it. Like us on all of your streaming channels. And if you need further property information, please visit our website, wakelin.com.au. Otherwise, we wish you all the best with your property decisions.